This is chasing wisdom. Real life, real money, real faith. I came up with a prayer and a plan. Kept my name on the line. This is chasing wisdom.
Real life,
Real money.
real faith.
I've been counting every step. Now I'm pressing through the noise. Hands up when the truth hit. I was built for this choice. This is chasing wisdom.
Real life,
Real money, real faith. Fade it out, then cut it clean. Chasing wisdom.
What up? My name is Rodney Lauriston, and this is Chasing Wisdom Podcast. Today I'm excited. I got a good topic for y'all. It's a loan hack. Many of you probably heard of it, but I'm gonna break it down for you and tell you what you need to do it and get it. This is the LightStream Loan hack. So without further ado, we're gonna get right on into it. All right. So, the LightStream Loan Playbook: how to qualify for up to $100,000 in unsecured personal financing. So this ain't in no business, nothing. You gonna get the 100,000 in your personal credit. Now that's tough. All right. So let's understand unsecured personal loans and how they work. Okay. So an unsecured personal loan and why it matters is an unsecured personal loan and does not require you to pledge any asset. No home equity, no car title, no collateral of any kind. The lender extends credit based purely on your credit worthiness, income, and financial history. Because there is no collateral, the lender takes no more risk, which is why strong credit profiles are rewarded with the best interest rates. For borrowers, the upside of significance is you can access tens of thousands of dollars without risking property, and funds can often arrive within 1 to 2 business days. Understanding this structure helps you see exactly what lenders like LightStream are evaluating when they review your application. So unsecured loans are approved based on your credit worthiness, which means your preparation before you even apply is everything. That's the key. All right, so let's talk a little bit about LightStream. LightStream, who are they and what makes them different? So LightStream is an online consumer lending division of Truist Bank and a major U.S. financial institution, which gives a substantial lending power and regulatory stability that many fintech lenders lack. What sets Lightstream apart is its rate beat program, which promises to beat any qualifying competitor's interest rate by 0.10%, making it one of the most aggressively priced auto loan products in their market. Lightstream offers loans from $5,000 to $100,000, which terms ranging from 2 to 12 years depending on the loan purpose, giving borrowers unusual flexibility. Unlike most lenders, Lightstream does not charge origination fees, payment penalties, or late fees, which means the advertised APR is truly what you pay. Their application is entirely online, and for approved borrowers, funding can happen as fast as the same business day. So you can get this 100K in one day. You know what I'm saying? So LightStream stands out because of the zero fees in the rate beat program, meaning prepared borrowers can access large amounts of capital at genuinely low rates. You know what I'm saying? So that's a bonus right there. That's just a bonus. That ain't even the sauce we trying to get to right now. The sauce, when we get to it, you're gonna be like, God dang. Now you might have heard of it. A lot of people have, a lot of people haven't. But this is a loan hack. You know what I'm saying? But let's get back to it. So, loan purpose and how they affect your rate and term. All right. Lightstream assigns interest rates in maximum loan terms, not just based on your credit score, but also on the stated purpose of your loan. This is critical and often overlooked. The purpose, like home improvement, vehicle purchase, and boat financing, tend to receive lower rates and longer terms because lenders perceive them as tied to assets, creating an improvement. So, debt consolidation loans also receive competitive rates, while lifestyle expenses like vacation or medical bills may carry slightly higher rates. You must select your loan purpose accurately, as Lightstream may ask for documentation or verification in certain categories, and misrepresenting the purpose can void the agreement. Understanding which purpose receives favorable treatment allows you to frame your financial need in the most advantageous and truthful way possible. So always select the most accurate and strategically advantaged loan purpose category. It can meaningfully lower your interest rate. So based on what you grabbing, what you saying you finna use this money for, it's gonna affect your rate. You know, but we gonna tell y'all exactly what to mark, exactly what to do, exactly what to grab. You know, we gonna get into it. But let's keep going. So building the credit profile Lightstream wants to see. The credit score threshold. This is what you actually need to qualify. Excuse me. All right. So Lightstream targets borrowers with a good to excellent credit score. So you need to have a good score. Don't think it's I'm gonna have a low score and get it. You need to have your score up to point. All right. Which is practice means a FICO score of at least 660, though the most competitive rates are reserved for borrowers with scores of 720 or higher. Unlike some lenders who publish a single minimum score, Lightstream uses holistic underwriting model that weighs your entire credit profile, meaning a 730 with a recent late payment may be viewed as less favorable than a 700 with a spotless payments history. Before applying, pull your credit reports from all three bureaus, Equifax, Experian, and TransUnion, and use annualcreditreporter.com. You know what I'm saying? And dispute any errors which affect roughly 25% of consumers' reports. Understand that your score is a snapshot, not a verdict. With focused effort, most people can move their score by 30 to 60 points within 3 to 6 months using specific strategies. The goal is not just to clear the threshold, but to land in the tier that earns the lowest available rate. All right, so that's important. Your target credit score you want to get is 720. You know what I'm saying? Before you apply for this Lightstream access code. I mean, this Lightstream loan. I'm sorry, y'all. And fix your credit report errors first before you even apply. Now, the reason why I'm a little cause I'm trying to get this out. This is very important because I did get denied one time applying for this loan because I had a great credit score, but I didn't have my payments in line. So like I had late payments. It was like a $6 late payment only because I forgot that I even had used my card because I barely use any of my cards. I got 5 cards, I don't use them. So I had a $6 payment on there and I never even realized. And so it sat there for months and it gave me a late payment history. You know what I'm saying? Off of $6, y'all. And this denied my loan. So understand it ain't just your credit score. They looking at how you managing your finances and your late payments and all that. So just because your score up to par don't mean you'll get approved. You gotta actually be managing your late payments and all that. So if anything late, bring it current. Make sure you score up to par. Dispute anything that you need to get off there before you apply, because little things can get you denied. That's what the guru's not gonna tell you. They tell you, "Oh, your score good. Come on, we got you," but they're not letting you know you gotta have everything current. You can't have no late payments, and you want to dispute a lot of stuff because it's not just your credit score that's gonna get you in. It's your bank statements, your credit, and your history. So all of this matters, y'all. They try to tell you just, oh, your credit score good, go ahead, woo woo. No, your credit score needs to be a 720 or better. Now they do 700s and 660s, but that's less favorable and tough. You know what I'm saying? You may, I don't know, but it's everything as in total. So let's get back into it. Credit utilization. The ratio of your credit card balance or the credit limits is the second most heavily weighed factor in your FICO score, accounting for approximately 30% of the calculation. For loan applications, experts recommend keeping your overall utilization below 10%, not just under 30%, as they commonly advise, because lenders running manual reviews often view even 20 to 25% utilization as a yellow flag. The fastest way to lower utilization is to pay down revolving balances before applying. Even if you have to temporarily redirect cash from savings, another powerful strategy is requesting credit limit increases on existing cards without opening new accounts, which reduces utilization without adding new inquiries. Pay close attention to statements, closing dates. Your balance is typically reported to bureaus when your statement closes, so pay down balances before that date to ensure the lower number is what shows up on your report. So make sure y'all get y'all credit card utilization below 10% before even applying. And anytime you pay down, hits your anytime a pay down payment hits before your statement closing date for maximum score impact, it's good. But if you wait and pay late, like they try to tell you, oh, wait and pay on your statement day, and it's gonna be on your credit, it's gonna show payment history. Yeah, it's gonna show history, but it's gonna also give you that utilization. You wanna pay it before that date. You don't wanna wait like they trying to tell y'all. They give y'all bad information. You wanna pay it off before that due date. The history still gonna be there that the card was used. The transaction is made already, but you want to pay it off before it's due. You don't want to wait till it's due and then pay it, because then it's going to report on your credit report that you had a balance. You don't want to have a balance. You want your utilization lower, almost to zero, 10% to zero. I like mine's at zero. I don't use my cards. I mean, I use them, but I don't. But I pay them before, so it's like I don't. So you want to have it at zero when it reports. You know what I'm saying? You want to have that like that, but you gotta use them so they don't close them on you, cause they will try. You know what I'm saying? Hence why I had a little $6 transaction that I forgot. You know, $6. Come on now, on a $1,000 limit card, I had $6, and I did not realize. But yeah, so let's get back into it anyway. Payment history, account age, and derogatory marks. It's a major problem, y'all. So payment history is the single largest factor in your FICO score, accounting for approximately 35%. And even one 30-day late payment can drop your score by 60 to 110 points, depending on the starting point if you had recent late payments within the past 12 months. LightStream's underwriting will likely flag your application regardless of your current score, because recent behavior predicts future behavior in lending. So, older late payments, 36 months or more, carry significantly less weight, in collections or charge-offs that are several years old may barely influence the score at all. Average age of accounts matter too. Opening several new credit accounts in the month before applying can lower your average account age and raise red flags about your financial desperation. If you have legitimate derogatory marks, the strategy is to wait them out while building a pristine recent record. and write a brief explanation letter for your file if the lender allows it. So a spotless recent payment record is non-negotiable for large loan approvals. Even if older marks exist, the last 12 months of perfect payments can dramatically shift how underwriters view you. So understand that, you know what I'm saying? Your payment history and what's on your credit report is going to matter. You know what I'm saying? Late payments, the old ones, they ain't that bad, but they bad. I'm gonna say they bad because you don't want none of that. But, you know what I'm saying? More recent ones actually get you denied, you know what I'm saying? More than the old ones because they want to see. And it don't matter if it's small, like $6, like I keep trying to stress to y'all, because it's the recent that they looking at, and they looking like, man, if you can't pay $6 right now, how you gonna pay this? You know what I'm saying? Recent. So that's how they look at you. All right, so now we're gonna talk about the debt to income ratio. A lot of this stuff is repeated by me, but it's for each content to let y'all know what's going on, to get each um what I want to call it, each type of loan or credit thing I'm trying to give y'all. You know what I'm saying? You know what I'm trying to say. Product. That's the word I'm looking for. It's for each product that I'm trying to tell y'all about. You got to worry about all this, okay? So debt to income ratio is the hidden qualifier that kills good applications. All right. Debt to income ratio, or DTI, measures your total monthly debt obligations as a percentage of your gross monthly income, and it is one of the most important yet least discussed factors in personal loan underwriting. LightStream, like most lenders, prefers a debt to income ratio below 36%, with a ratio of above 43%, generally considered disqualifying for a large loan amount, regardless of your credit score. To calculate your DTI, add up all your monthly minimum debt payments, mortgage, car loans, student loans, credit card minimums, and divide by your gross monthly income. If your DTI is too high, you have two levers: increase income through documented side income, or raise or reduce existing debt by paying off smaller balances first. Paying off small auto loan and credit cards before applying can sometimes drop your DTI by 5 to 8% points, which can be the difference between approval and denial. You know, so calculate your DTI before applying, and if it exceeds 36%, pay down smaller debts first or document additional income. You know what I'm saying? Sources that improve your ratio. You know what I'm saying? So if you gotta put on your side hustle money on the record, put it on there, or pay down what you can pay down, but you want to have your debt to income ratio low. You know what I'm saying? Most people add like side money, child support, alimony, anything. You know what I'm saying? Social Security. So get that together, y'all. All right. Now, pre-application checklist. This is what you need to prepare before you click submit. All right. Walking into a large loan application unprepared is one of the most common and costly mistakes borrowers make. It can result in hard inquiries that damage your credit score without any benefit. If you are denied before applying to LightStream, assemble the following: your most recent 2 years of W-2s or tax returns, your two most recent pay stubs, your last 2 months of bank statements, a list of all current debts and monthly payments, and documentation of any additional income sources such as rental income or freelance earnings. Check your credit reports one final time to confirm no new errors have appeared, and verify that no new hard inquiries have been added by other lenders in the past 60 days. Run a pre-qualification check if available. LightStream does offer a soft inquiry option to see estimated rates, so understand what the tier you're likely to fall into. Having everything organized before you start reduce errors on the application, which can slow process and trigger verification requests. All right, so assemble all your financial documentations and use pre-qualified tools before submitting your application to avoid hard inquiry damage and application errors. You understand? That's pretty simple. You know what I'm saying? Have your paperwork together. Now, this is the most important part. So y'all need to pay attention. Filling out the application. All right. This is how you maximize your approval odds. The LightStream application is completed entirely online and typically takes 15 to 20 minutes. But the choices you make within the form significantly influence your outcome. So, select your loan purpose carefully based on your understanding of which category receive favorable rate treatment and request in the amount you genuinely need, not inflated numbers, as requesting significantly more than your income supports can trigger automatic rejection or manual review flags. Which the manual review, if you know what you're doing, ain't no problem. Cause I can show no pull up my bank statement and say, huh, I'm making that money, baby. You know what I'm saying? But don't flat, what's the word I want to use? Don't lie. I'm gonna just be straight up. You know what I'm saying? Don't exaggerate is what I was trying to say. Don't exaggerate your income because you will trigger the red flag and they will want to pull them bank statements and see what you talking about. So put what you really making down. Like be honest now, because that's important. That can get you denied if you lying. All right. So enter all income sources accurately, including gross annual income rather than net, since lenders work with pre-tax figures and include documented side hustle income that can be verified. For employment statuses, be precise. LightStream distinguishes between employee and self-employed and retired, and each triggers a different documentation path. Double check all numbers before submission, since inconsistencies between your application and supporting documents are one of the top reasons for delays and denials. So reporting gross annual income, you know what I'm saying? Not your take home pay, and include all verifiable income sources to present the strongest possible financial picture. You know what I'm saying? Remember that. Put your gross annual income, not your net home take home pay, not after the taxes, before. You know what I'm saying? Understand that. That's what they're going to look at. Now, understanding the rate, tiers, and how to position yourself in the best one. All right. LightStream, like most premium personal lenders, use tiered pricing that assigns different interest rates based on bands of credit worthiness. And moving from one tier to the next can mean hundreds of thousands of dollars in interest savings over the life of the loan. The rate you receive is influenced by your credit score, your credit depth, how many accounts, and of what types, and how long for. So your income to debt ratio in your requested loan term, short terms typically receive lower rates. Strategically choosing a slightly shorter term than you feel you need can sometimes place you in a more favorable rate brand while still keeping monthly payments manageable. If you receive an approval with a rate that feels too high, take note of any adverse action language in the decision letter, which legally must tell you which factors most negatively affects your outcome. That is your roadmap for improvement before you reapply. Wait at least 6 months before reapplying after a denial so the hard inquiry ages and your improved credit has time to reflect in your profile. If denied, read your adverse action notice carefully. It is legally required a roadmap that tells you exactly what to fix before reapplying. So when you do apply, if you do get denied, they will send you a letter giving you the reasons what the reasons you got denied. Typically it'll be like late payments or high credit to debt utilization, young credit age, stuff like that. You know, yeah, that's what it's gonna say. And you'll know exactly what to fix. Okay, my credit age is too young. I need to age my credit. Okay, I got late payments. I need to pay some stuff down. You know, just like that. So use the rate beat program strategically. Now the rate beat program, we already know what that is. They're gonna beat the competitor's rate on the interest. All right, so LightStream's rate beat program is a genuine competitive advantage, but it has a specific rules that must be followed to unlock it. You must have a competing offer from a qualifying lender. The offer must be from the same loan type and amount, and you must submit the competing offer before your loan funds. Qualifying lenders must be federally or state chartered banks, credit unions, or finance companies, not marketplace aggregators or peer-to-peer platforms. To use this program strategically, apply to 2 or 3 reputable competing lenders simultaneously, gather any approval offers you receive, and then present the best competing rate to LightStream before accepting funding. Because multiple loan applications within a 45-day window are typically treated as a single inquiry by FICO rate shopping rules. Doing this in a focused, unframed as a single inquiry by FICO rate shopping rules. Doing this in a focused time frame minimizes the credit impact. The result is that you either get LightStream's rate beat by 0.10% or 0.10%, or you discover a competitor genuinely offered a better product. Either outcome is a win. You know what I'm saying? So anyway, apply to multiple lenders within 45-day window to rate shop without significant credit damage. Then use the best competing offer to trigger LightStream's rate beat program guarantee. So yeah, that's another key gem right there. When applying for loans, you want to try to bundle them together, but don't do too many and make you look desperate, cause they see that too. But bundling them together, maybe 4, you know what I'm saying, max. You bundle them together and it's gonna hit like one inquiry. Whereas if you spacing them out, you know what I'm saying, then you got a bunch of inquiries that's gonna hit your credit report and get your number drop significantly. It's hard to build credit, but it's so easy to mess it up. You know what I'm saying? It's crazy. So debt consolidation matter when a personal loan actually saves you money. All right. So using a personal loan to consolidate high interest debt is one of the highest returns financial moves available to the average consumer, but only when the math actually works in your favor. The break even analysis is simple. If weighed over interest rate across your existing debts exceeds the personal loan APR, consolidation saves you money, and the savings can be enormous when high rate credit card balances are involved. The average credit card interest rate in the US consistently runs between 20% to 28%, while a well qualified LightStream borrower might access a rate as low as 7% to 10%, representing a potential savings of 10 to 18% points on every dollar consolidated beyond the interest savings. Consolidation also simplifies your financial life. Instead of tracking 5 to 8 minimum payments each month, you have one fixed payment on a defined payoff schedule, and psychological benefit of seeing a definite payoff date is often what finally pushes people to stop accumulating credit card debt. So always run the weight and average interest rate comparison before consolidating. The math tells you exactly how you want to save your money, whether you want the loan or whether it's worth pursuing. You know what I'm saying? That's a debt consolidation loan. You know what I'm saying? You weigh the odds and see if it's worth you even doing it. Because it may come out with a lower interest rate, save you thousands of dollars, and you got a definite date you're going to pay all this stuff off, and you got one payment to manage instead of different cards and different debts to try to make payments on. You know what I'm saying? It's gonna make it very easier, but it may or may not be worth it. Cause if the interest is more on the consolidation, I mean, come on, you know, that's not what you want to do. But if it's less, you definitely want to go that way. All right. Home improvement loans. How to spend the money that earns money. All right. Using a personal loan for home improvement one of the most financial sound applications or borrowed capital because strategic improvements directly increase property value, creating a return on investment that offsets the cost of financing. According to the Remodeling Magazine annual cost versus value report, certain projects such as garage door replacements, manufactured stone veneer, and minor kitchen remodels regularly return more than 80% to 100% of their costs in added home value. Such garage regular returns. All right, the key is to prioritize improvements that appraisers recognize and home buyers value. I hate when I get tongue tied because it just throws me all the way off. All right, let me get back into it. The key is to prioritize improvements that appraisers recognize as home buyers value, not personal preferences, upgrades that only matter to you. For LightStream home improvement loans, significantly funds can be used more projects including landscape, HVAC replacement, and bathroom remodels without requiring contractors, invoices, or permits or times of the application. Running a simple ROI calculation, projected value add minus project cost before approving each project ensures you deploy loan funds on improvements that generally build well. All right. I said that kind of fast, so I'm going to say it again for you. For LightStream's home improvement loans specifically, funds can be used for more projects including landscape, HVAC replacement, and bathroom remodels without requiring contractor invoices or permits at that time of the application. Running a simple ROI calculation, projected value added minus project costs before approving each project ensures you deploy loan funds on improvements that genuinely build wealth. So use industry ROI data and personal preference to choose which home improvements to fund with a loan. Ensure borrowed capital translate into real property value. And this is big, y'all, because this how a lot of these people getting out there and getting into the real estate industry, and they make a lot of money. If you can find a property that just need a little renovation and you gonna improve the value, you can. That's called a fix and flip, or you can fix and keep. That's the main goal. They tell you to fix and flip, but the fix and keep is key. I mean, side note here, you know what I'm saying? You can take this loan, you can get this house, or if you already got the house, fix it. You know what I'm saying? Renovate it, get it looking better, update the appliances, lighting and stuff, simple stuff. Just update it, and then the property value goes up. When that property value goes up, go ahead and pull the equity out, reinvest that equity, or pay back that loan, because you know you got to pay the money back. But pull that equity, now you just got extra money out of the house, right? And you got a brand new house. Basically, you got renovation. And with renovation, what you want to do is, if you smart, I'm not gonna say smart. If you want to be in that game, you know what I'm saying? What you do is when you renovate, you want to try to get into big single family homes. So you want to have 4 rooms or more. You know what I'm saying? 3 to 4 rooms or more, and you want to renovate it. And what you want to do is you want to take each room and rent the rooms out. You don't want to rent the whole thing to one person. You want to rent each room out through a platform called SplitPad. And so you want to look for these multi-unit single family homes. You know what I'm saying? Multiple room single family homes. You want 3 or 4 rooms or more, and you rent each room out. You know what I'm saying? And lights and everything included. You know what I'm saying? All that good. And that's how you make the money back off the refinance to be paying that back. But you also made your bonus and you paid back your loan that you took to renovate it. You know what I'm saying? And so now you got a cash flowing property. And over time, after the refinance is paid off, you know what I'm saying? Then you get your money, start just accumulating money. That's just a side note. But let's get back to this LightStream loan. All right. Excuse me. Managing repayment, how to pay off your loan faster without a penalty. LightStream charges no payment penalties, meaning every extra dollar you pay towards your principal directly reduces both the remaining balance and the total interest you will pay over the loan's life. This is significant advantage compared to lenders who penalize early payoff. A simple and highly effective strategy is to divide your monthly payment in half and pay bi-weekly instead of monthly, which results in one extra full payment per year without requiring any additional budget effort. On a 5-year loan, this approach can cut 6 to 8 months off your repayment timeline and save hundreds to thousands of dollars in interest. Another powerful move is to directly any windfalls, tax refunds, bonuses, and side income directly to the principal reduction immediately rather than allowing that money to draft into discretionary spending. Set up an automatic payments to both ensure on-time payment and qualify for LightStream's auto pay rate discount, which can be 0.50% points off your rate. So switch to the bi-weekly payments and enable your auto pay from day one. These two moves alone can save hundreds of dollars in months of repayment time. You know what I'm saying? That's how you pay it off. That's the key to paying it off faster. Bi-weekly. You know what I'm saying? Auto pay. All right. The credit score benefit, how the personal loan improves your personal over time. Many borrowers are surprised to discover that taking a personal loan when managing correctly actually improves their credit profile over time in ways that set them up for even better financial products. A personal loan adds to your credit mix, which accounts for 10% of your FICO score, particularly in your profile previously contained only revolving accounts like credit cards. As you make consistent on-time payments, your payment history score, the large FICO factor, receive steady stream of positive data points and compounding your favorite months and years. Debt consolidation loans have the additional benefit of dramatically lowering your credit card utilization the moment those balances are paid off, which can produce a significant score increase within 30 to 60 days of the accounts being updated. If you manage a $70,000 personal loan responsibly for 24 months, you will likely emerge with a meaningfully stronger credit profile, opening doors to mortgage rates, business credit lines, and premium credit cards that would otherwise have been out of reach. A well-maintained personal loan is a credit-building tool. It diversifies your credit mix, builds payment history, and if used for debt consolidation, can produce a rapid score improvement through lower utilization. So that's what them debt consolidation loans do. All right. So that's what we got right now. I'm gonna give y'all the gem, what I got y'all here for. So the LightStream loan hack. What you want to do is when you get on LightStream, you want to get the 100K right personal loan. What you want to do when you signing up and applying, you want to select auto loan by dealer. Use auto loan by dealer, right? Fill out your financials correctly. Choose 60 months for the long term and choose employee on how you get paid. Don't choose self-employment. Always choose employee. Even if you're self-employed, put your LLC down as your employer, and choose on your first go around. You want to be between 45 and 15,000. So you don't want to go over 45,000 on your application. All right, and this is the LightStream use auto loan. You know what I'm saying? So boom, you apply for that, right? You get approved. Now this that hack part to it. This is why I be trying to tell everybody I know. But remember, your credit score gotta be up to par, your payments, all that. You gotta have a good profile. Excuse me. But boom. So when you apply for this auto loan, just use car auto loan, right? They're gonna deposit the money directly into your bank account. Directly into your bank account. This is LightStream's used auto loan. Remember that. This is LightStream's used auto loan. LightStream is an extension of Truist Bank. You know what I'm saying? They are lenders. But let's get back to it. So when you get this loan, they're gonna deposit the money directly into your account, right? And in the disclosures, you will see that if you do not decide not to use the money on an auto loan, the money will automatically be converted and used as a personal loan. So you can get up to $100,000 personal loan from LightStream using this hack. This is a hack, y'all. This is a hack. So understand what you want to do is apply for the used auto loan. Make sure your credit score, your payment history, everything is good. Make sure you right. This the hack, y'all. Apply for the LightStream's used auto loan. Select the used auto loan by dealer. Don't select by private seller, by dealer. And after you select that, make sure you click on the auto pay. Make sure you select the 60 months long term. Put your real financials on there. Don't apply for something that way more than what you're making. You know what I'm saying? We just went over that. Don't apply for it because they will trigger red flags and they're going to check that documentation on you. All right? And you hit submit. If you approve, this money is going to be deposited directly into your bank account. So you have to have a account on file with them as well. They're going to ask for that. But the funds will go directly into your bank account. Most people see it within 24 to 48 hours, depending on your credit and approval and if you trigger a red flag or not. Because if you trigger where they got to verify documentation, it's going to delay. It's going to take a little longer. But you should still be able to get through that. All right? But the money is going to be deposited directly into your bank account for the auto loan. Now, if you choose not to use this money on an auto loan, this money will then convert to a personal loan that you still have to pay off, but now you just got a $30,000 to $100,000 loan, personal loan. So this is how you get bigger loans amounts on your personal side. You know what I'm saying? You'll get a bigger asset. It'll turn to a personal loan. And you just follow the loan terms, you pay it off. Now you got $100K in your account. Just like that. You know what I'm saying? But I am Rodney Lorson. This is Chasing Wisdom Podcast. I hope y'all got the gems. I hope y'all enjoying this. I'm trying to keep going with y'all. I'm trying to keep y'all getting this information. So make sure y'all like, share, subscribe, follow, spread the word. Let people know that what you came across Chasing Wisdom Podcast and tell them to go ahead and check it out, man. Because we trying to spread this and we is trying to make our chips off of it. This free game, but I mean, look at the video for me on YouTube, Spotify, anything, Apple. Look at the video for me so these platforms can pay me for this free game. You know what I'm saying? But I am Rodney Lorson. This is Chasing Wisdom Podcast, and we gonna be out. How y'all doing? My name is Rodney Lorson, and this is Chasing Wisdom Podcast. We gonna talk about